Welcome back to the channel. Look at that. That is what we call green, very green. This is the 1 week performance of the stock market, and almost everything's green. It was quite the move this week. We had the Fed talking. They did not raise rates. I honestly didn't even listen to the speech, but I think at this point there's not much. They've been saying the same thing all year. And they didn't raise rates. In my opinion, I think they're done raising rates unless oil rips and something crazy happens with inflation. But it does look like inflation is not accelerating at the pace it was. Again, we're never going to see the prices that we used to see, but it's not continually just skyrocketing like it was last year. So I think that's great news, and the market was just a huge rip roar. You can really see it on the Qs. So here's the Qs, the NASDAQ 100. You can see here, we reached this peak in July, and we're still trending in a downward direction, but we're kind of in this range here. And it was just quite the move this week, and you can see down here the volume, just green, green, green. I mean, that's a big few days there. So that's cool. It's great. And I think we talked last week for a possible bounce because we were so beat up. And so technically made sense for a good time for a bounce. The big tech companies had really good earnings. The one I wasn't too impressed with was Apple. But it makes sense, we're in we're going through cyclical rotations right now, and services are holding up real well. So if you think about Google, I'm watching football right now on YouTube TV. I'm not going to not pay that, but maybe I won't buy an iPhone. Maybe I won't upgrade, or maybe I won't upgrade my laptop through Apple or things like that. But services, I'm still paying for my Microsoft Word subscription, whatever. So Facebook companies are still paying for ads, and Facebook was interesting because it seems like they're using AI to really help the click-throughs on those ads. So you're seeing companies saying, you know what, I'm going to put more money into Facebook ads because I'm seeing a good return on my investment. And Facebook's, they're saying that that's because of AI. They're able to put ads in front of the right people at the right time using AI. So that's pretty interesting. So big move. We also had rates, huge move down. So the 10-year yield had a few days there where it really just dumped. You can see we touched 5% on the 10-year yield, and it's just been a free fall. So wouldn't be surprising if we climb back up a little bit. But again, I believe the Fed is done raising rates. Now, I don't think they're going to cut rates anytime soon. If they do, they're cutting because something is wrong. So I'm not rooting for a cut, because if there is a cut, that means we're in a recession, something broke financially, and we're going to have to deal with that issue. So what I do think could happen here is we're seeing money flow into bonds. People are saying, okay, Fed looks like they're done. Economy is looking somewhat weak in some areas. Again, things are cyclical. They're rotating. You may see travel cool off here during the winter times. You may see people, automotive continue to be slow. Solar continue to be slow. Things that are cyclical be slow, but the things that are always, staples are going to be okay. So anyways, people are going to say, you know what, let's put some money into bonds because it looks like the Fed is done raising rates, and now let's lock in a 10-year bond at around 5% before it starts dropping more. So I could see that being the case here. Again, I'm not a chartist, but this looks like pretty good support here for the yields. But who knows what's going to happen. We also have war going on, so that is going to cause people to say, you know what, maybe I don't own Amazon, maybe I buy more bonds in the short term just because it seems like things are choppy. So we'll have to wait and see what happens here with interest rates, but to me this looks really good, and this will take some pressure off of stocks in the short term. But when we're looking at the big picture here, this was quite a move in the S&P, pretty quick. It wouldn't surprise me if we do a little back and filling. Maybe we retest down here. I don't know. But I'm glad I was buying down here. Some things ran away too fast, which we'll look at here in a second. But I'm prepared for if there's another opportunity to buy some of those stocks at my desired prices, I will be pulling the trigger. So this past week, I did close out my put on Tesla. I closed it out for maybe 50 bucks profit, but I moved right into shares. And the reason for that is because the volatility got crushed. Let me see if you can, oops. So this right here on the right side is the 5-day change in volatility. So you can see the volatility in a lot of these stocks is getting crushed, meaning the price of the options is getting crushed. So selling options it's not appealing when volatility is collapsing, because what you're selling it for is a low price. You want to sell things for a high price tag. You want to get the most amount of money for your sales. So I ended up closing the put, and I ended up buying shares, and those shares are already up 10%. And this is just a third of the position that I want in this account for Tesla. So I could see me buying some more at 225 if we continue to break out. I could also see me buying more if we break back down. My target or my purchase here was $199.99, just because it was a fun number. And that looks like it's a good spot here. I also have been buying TMF. Now TMF is a levered play on TLT. So TLT is inverse to the 10-year yield. So this stuff gets pretty complicated, and I know I've talked about this in the past, but this is the TLT stock chart on a weekly time frame, and you can see here it's gone down from 180 down to 80. So what this is this is bullish on the price of bonds. Yields and bond prices move inverse. So if the yield goes up on bonds, the price comes down. It's complicated stuff, and you have to see it 1,000 times for it to really click in your mind. But this chart here has gone down drastically because of the drastic increase of yields. So again, here's the yield chart skyrocketing. Here's the TLT chart plummeting. So this trade, buying the TLT, is a trade that we have peaked in rates, or we're near a peak, and there's not much more for the yields to go up on the 10-year. And if that's the case, you're going to see money go into bonds, because obviously based on this chart, people have been not buying this, people have been shorting this, because they see inflation's up, economy's strong, Fed's going to have to jack up rates, and that's what's happened. So I'm in here, the TLT. I'm going to be in here for a long time, and I'm going to be continuing to buy the dips. We may be in a little fake out rally like we've been right here, and maybe we consolidate and then have another drop. But there's not a whole lot. I mean, you look at this chart throughout its lifetime, it's been going in one direction until recently, boom. So it could still go down to 60 and go down to 50. Who knows? But that's going to mean rates are so high, and that's just not sustainable for this zombie world that we live in now. So you're already seeing right now the amount of interest payments that the U.S. is having to pay for all their debt. It's not sustainable. So eventually we're going to have to either increase taxes drastically to cut the debt, cut spending drastically, which right now we're going into an election cycle. Neither of those are palatable for the politicians. Or rates will have to come down within the next 5 years. Now, maybe they don't go back to 0, but maybe they don't stay at 5. Maybe they go to 3, 3.5, something like that, which would be great, because we don't want super low rates, because that just fuels a bunch of these boom bust cycles, and that seems to be what the Fed likes to do. I'm not going to get into all that right now, but those were the things I did this week. I also did fill up my position in ENPH. Boy, this chart looks, what a doozy here. So I've reached my my max goal that I wanted to have in an account with ENPH, and I think I did sell a call in here as well, just to try and get back some of that income, because I started buying around right here. I think it was 130, and then I held off because it looked like a falling knife. Then I bought after their earnings was the other little chunk, and then I finished buying somewhere in here. I think it was 76 or something like that. I'd been nibbling on the SMH on these drawdowns, and I'm waiting for another drawdown. So I think my next purchase would be around 140 if we can get there. I filled up my position in VICI, stock I really like, and again, this would be another great way to play rates peaking. I've got my full position on Amazon. This one took me a while to build up, but Amazon's looking pretty good. The Qs, I'd like to get some more as well. And if we go look at the to-do list here, we've kind of gone over this. Opportunities, cash and bonds, cash to buy the dips when they occur. Wait for the next dip. Don't FOMO in right now, is my advice. Selling options was green, but now it's yellow because volatility is crushed. Have a plan, don't get shaken out. Again, you can see I have goal allocations of stocks that I want to buy, and I buy them when they are getting close to my price target. I have a plan. Now, it doesn't always go the way I want to, because on this plan I had buy AMD at a certain price, by PLTR, by Shopify, by SOFI. Those things just ripped. So I never got an opportunity, but I'm not chasing them. I'll either wait or I'll miss out. I did buy Tesla. I'm happy about that. I did buy Bitcoin. I did buy SMH, Amazon, all these other things. So you don't have to catch them all, but have a plan and be ready to execute on that plan. And I have on here, don't get shaken out. You could also have on there, don't get scared. Because for months I've been begging for Tesla to get to 200 bucks when it was at 260, 280, 290. And it gets to 200, and it's a little like, ooh, but what if it goes to 110? What if it goes to 150? What if Elon dies? What if this? What if that? When it's darkest is the time to buy. So don't get shaken out and don't get scared out. Stick to your plan, okay? Because it's easy to turn on the TV and see the war, see interest rates, see car sales not being so hot. But have your plan and execute the plan. So things I'm looking to buy right now, waiting for the next dip. Tesla, TLT, PayPal. PayPal may be the next one that I get back into. I've been trading this sucker all year long and it hasn't done anything. I really like the company. I use their products all the time, but it's been a dog. Their earnings, really good earnings on paper. I need to listen to the call with the CEO, but they reported 7.4 billion in a quarter. I'll probably be buying some PayPal this week. Look at that. Technicals say buy. Nothing about this tells me to buy it. So, boy, look at this chart. Anyways, I'm getting distracted. So, let's be patient this week. I don't think there's a lot of news coming out. I don't think there's jobs or CPI or anything like that. So it's just going to be an interesting week to watch the price action. So again, we had a nice rip last week. Maybe we continue chugging up higher. That would get me really scared. I really don't like when things get super extended, but who knows? Maybe we break out of this little trend here and it's looking like all-time highs. Who knows? We were there right here. Remember, this was the case, or right around here. We broke out, all-time highs, and then whoa, 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 whoa. So just be wary. Now's the time to be cautious and, keep your head on a swivel. Don't make any big bets right now. I wouldn't be shorting either. So anyways, that's all I got for you guys this week. Longer video. I'm going to keep these shorter. Too much rambling. That's all I got for you. Peace.